Yeah, so that decision, and by the sounds of those comments, sound pretty in line with what we were expecting and what most people were expecting. The governor's been a little bit more upbeat on the Australian economy in recent weeks, and that sounds like it's feeding through to their view today. Some of the downsides there, particularly the labour market, unemployment rate has continued to come in higher than the RBA have expected or wanted to see. And so that's why they'll be saying that the unemployment rate is only going to fall to 5% in contrast to their view that it needs to fall to 4.5% before wage growth starts to pick up in earnest.
What's going to be supporting then the Australian economy going forward? They've said here that the outlook for the economy is supported by low interest rates, tax cuts, infrastructure spending and the housing market. How much more stimulus do you think will come in the form of interest rate cuts? And there are some out there that are suggesting perhaps by the end of this year into next year we'll be down to half of 1% when it comes to the official cash rate. So there's still 50 more basis points in it. Yeah,
we think that the current stimulus is not going to be enough to get consumption up to where the Reserve Bank wants to see it. So we think the bank's going to cut twice more, once at the end of this year in November and once in early next year.
What does what's happened over the last few days or so mean for not only the RBA, but the RBNZ, which we're going to talk about in a moment as well? We've got this escalation on the trade front. We've now got the Chinese currency moving beyond that 7 level. We've had markets roiled overnight. We've seen currencies like the Aussie dollar drop significantly just in the last few days as equities have moved to the downside. That's though going to be supportive for the Australian economy. Aussie dollar at about 67 US cents.
Yeah. So the direct impact of the trade war is likely to be reasonably limited. Most Australian exports to China don't eventually feed into US exports. But in saying that, the indirect impacts can be pretty significant. The weaker dollar should boost trade in the near term. But the confidence effects are likely to be negative, so business investment may take more of a hit than we're already expecting. And to the extent that the trade war influences growth in China, that could reduce demand for Australian exports as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.